Welcome back to Goldix XRP, the channel where we break down the biggest XRP developments, whale activity, market trends, and hidden signals that could impact the future of the XRP ecosystem. Today, we are looking at a major event that has caught the attention of investors across the crypto market. Reports show that XRP whales have moved an incredible 135 million XRP off exchanges, and naturally, many people are asking the same question. Why would large holders remove such a massive amount of XRP from the available supply? More importantly, what could this mean for the future price of XRP? When whale activity reaches this level, experienced investors pay close attention. Large holders often have access to extensive market research, industry insights, and long-term strategies that smaller investors may not see immediately. While no one can predict the future with certainty, movements of this size rarely happen without a reason. The removal of 135 million XRP from exchange platforms means those tokens are no longer readily available for immediate selling. Instead, they are being transferred into private wallets, cold storage solutions, or long-term holding accounts. This matters because exchange balances are one of the indicators many analysts use to understand market sentiment. When large amounts of cryptocurrency flow onto exchanges, it can sometimes suggest that holders are preparing to sell. On the other hand, when significant amounts leave exchanges, it often signals the opposite. Investors may be preparing to hold their assets for an extended period rather than selling them in the short term. The timing of this movement is especially interesting. XRP continues to attract attention from institutions, payment companies, and global financial observers. The digital asset has maintained its position as one of the most recognized cryptocurrencies in the market, and many supporters believe its utility in cross-border payments gives it a unique advantage compared to many speculative crypto projects. As discussions around regulation, adoption, and blockchain integration continue to grow, some large investors may be positioning themselves ahead of developments they expect to unfold over the coming months. Another important factor is market psychology. When retail investors see whales accumulating or moving assets into private storage, confidence often increases. This creates a powerful narrative that large investors expect higher prices in the future. Whether that expectation proves correct remains to be seen, but the market closely watches these signals because whale behavior has historically influenced sentiment across the crypto space. Now that we understand the scale of this massive XRP movement, the next question becomes even more important. What are these whales actually preparing for? While nobody outside of these wallet owners knows their exact intentions, there are several possibilities that market analysts continue to discuss. Each possibility provides valuable insight into how large investors may currently view XRP and its future potential. One of the most common explanations is long-term accumulation. Throughout the history of financial markets, successful investors have often accumulated assets during periods when they believed the market was undervaluing future opportunities. In the crypto market, whales frequently move assets off exchanges when they plan to hold them for months or even years. By transferring XRP into private wallets, these holders reduce the temptation to react to short-term price swings and instead focus on larger future goals. Another reason attracting attention is the possibility of growing institutional interest. Over the past few years, institutions have become increasingly involved in digital assets. Unlike retail investors, institutions often store their holdings in secure custody solutions rather than keeping them on public exchanges. When large amounts of XRP leave exchanges, some analysts speculate that institutional buyers may be increasing their exposure. While there is no direct confirmation that institutions are behind every large transaction, the size of these movements naturally creates speculation throughout the market. There is also the issue of supply and demand. Markets are driven by the balance between available supply and buyer demand. If a significant amount of XRP is removed from exchange circulation, the available supply for immediate purchase becomes smaller. If demand remains steady or increases while available supply decreases, it can create upward pressure on price over time. This does not guarantee higher prices, but it is one of the reasons traders closely monitor exchange reserves. Many XRP supporters also point toward the broader development of blockchain-based financial systems. Around the world, financial institutions continue exploring faster settlement technologies, tokenized assets, and more efficient payment infrastructure. XRP has long positioned itself as a digital asset focused on speed, efficiency, and global transactions. Because of this, some investors believe the long-term value of XRP could be connected to wider adoption of blockchain solutions within traditional finance. Market confidence is another factor that cannot be ignored. Large whale transactions often act as signals. Even when investors do not know the exact reason behind a transfer, they pay attention because whales usually have significant capital at risk. A holder moving millions of dollars worth of XRP into long-term storage may be demonstrating confidence in future developments. This confidence can influence market sentiment and encourage other investors to take a closer look at the asset. At the same time, smart investors understand the importance of remaining realistic. Whale movements alone do not guarantee price increases. Markets are affected by economic conditions, investor sentiment, regulations, technological developments, and many other factors. However, when multiple positive indicators begin appearing together, large XRP withdrawals become much more significant. As the market continues to analyze this massive withdrawal of 135 million XRP, attention is now shifting toward a bigger question. Could these whale movements be connected to developments that have not yet been fully reflected in XRP's market price? This is where the discussion becomes especially interesting because many analysts believe that whale behavior often reveals changing expectations long before the broader market reacts. One reason investors are paying close attention is the growing focus on real-world blockchain adoption. In previous crypto cycles, much of the market was driven by hype, speculation, and short-term trading activity. Today, however, the conversation is increasingly centered on utility. Investors are looking at which digital assets can solve real problems, support financial infrastructure, and provide value beyond simple trading. XRP has remained part of that conversation because of its long-standing focus on fast and low-cost cross-border transactions. For years, supporters of XRP have argued that the asset's strongest advantage is not speculation but utility. The idea is simple. Traditional international payments can be slow, expensive, and dependent on multiple intermediaries. Blockchain technology offers a potential alternative, and XRP has often been discussed as one of the assets designed to improve efficiency in this area. Whether adoption grows rapidly or gradually, many long-term investors continue to view this utility as an important factor when evaluating XRP's future. Another reason whale activity is attracting attention is because large investors often think in terms of years rather than weeks. Retail traders may focus on daily price movements, but whales frequently build positions based on long-term expectations. They are often less concerned with short-term volatility and more interested in where an asset could be several years from now. When a large amount of XRP is removed from exchanges, some analysts interpret this as a sign that major holders are positioning themselves for a longer investment horizon. At the same time, the cryptocurrency industry continues to evolve. Regulatory clarity has become one of the most important topics for investors around the world. Markets generally prefer certainty over uncertainty, and whenever progress is made regarding regulatory frameworks, investor confidence can improve. Many XRP holders believe that greater clarity could encourage additional participation from institutions and large financial entities. Whether those expectations are fully realized remains uncertain, but the possibility continues to be a major talking point within the XRP community. There is also the psychological aspect of market cycles. Historically, major opportunities often emerge when the majority of investors are distracted by short-term news and price fluctuations. During these periods, experienced investors sometimes accumulate positions quietly while public attention remains focused elsewhere. This does not mean every whale transaction signals a major breakout, but it explains why many analysts closely monitor large wallet activity. What makes the current situation particularly noteworthy is the scale involved. 135 million XRP is not a routine transfer. It represents a substantial amount of value being moved away from immediate market liquidity. Every time supply leaves exchanges, investors naturally ask whether those tokens are being prepared for long-term holding rather than short-term selling. Now let's focus on one of the most important aspects of this entire situation: exchange supply. While headlines often focus on price movements, experienced investors understand that supply dynamics can play a major role in determining how an asset behaves over time. This is why the removal of 135 million XRP from exchanges has generated so much discussion throughout the crypto market. When XRP is held on an exchange, it is generally available for immediate trading. Buyers and sellers can access that liquidity at any moment. However, when XRP is transferred into private wallets, cold storage, or long-term custody solutions, it effectively becomes less accessible to the active market. The coins still exist, but they are no longer part of the readily available trading supply. This distinction is extremely important because markets react not only to total supply, but also to available supply. Think about it from a simple supply and demand perspective. If demand for XRP remains stable while the amount available on exchanges continues to decrease, the market may eventually face tighter supply conditions. In such an environment, buyers could find themselves competing for a smaller pool of available XRP. Again, this does not automatically guarantee higher prices, but it creates conditions that many analysts watch very carefully. This is one reason why exchange reserve data has become such a valuable metric in the cryptocurrency industry. Investors frequently monitor whether assets are flowing into exchanges or out of them. Large inflows can sometimes suggest increased selling pressure, while large outflows often indicate accumulation or long-term holding behavior. In the case of XRP, the removal of 135 million tokens has naturally sparked conversations about whether whales are preparing for a future scenario where supply becomes increasingly limited. Another factor worth considering is investor confidence. Large holders rarely make significant moves without a strategy. Whether their goal is long-term storage, portfolio management, institutional custody, or future positioning, these transactions demonstrate deliberate decision-making. For many market participants, whale actions serve as a signal that major investors continue to pay close attention to XRP despite short-term market uncertainty. The broader crypto market also plays a role. Digital assets tend to move through cycles of accumulation, expansion, correction, and consolidation. During accumulation phases, strong hands often build positions while public interest remains relatively quiet. By the time widespread attention returns, much of the accumulation may have already occurred. This pattern has appeared repeatedly across different crypto cycles, which is why many analysts examine whale behavior so closely. What makes the current XRP situation particularly interesting is the combination of factors happening at the same time: discussions about adoption, institutional participation, regulatory developments, and blockchain innovation continue across the industry. Against that backdrop, a major reduction in exchange supply becomes even more noteworthy because it may reflect growing confidence among large holders. Of course, no single metric should be viewed in isolation. Smart investors consider multiple indicators before forming conclusions. However, when substantial amounts of XRP leave exchanges, it adds another important piece to the puzzle. The market is now watching closely to see whether this trend continues and whether additional whale accumulation follows. As we bring everything together, one thing is clear: the removal of 135 million XRP from exchange supply is a development that deserves attention. Whether you are a long-term holder, an active trader, or someone simply following the XRP market, transactions of this size are difficult to ignore. Large whale movements often provide valuable clues about market sentiment, and while they do not guarantee future price action, they can help investors understand how major players are positioning themselves. Throughout this analysis, we have explored several possible reasons behind this massive withdrawal. It could represent long-term accumulation by experienced investors. It could be related to institutional custody solutions. It could reflect growing confidence in XRP's future utility and adoption, or it could simply be part of a broader strategy being executed by large holders who believe current market conditions offer attractive opportunities. The truth is that only the wallet owners know their exact intentions, but the scale of the transaction has undoubtedly captured the market's attention. One of the biggest lessons from this event is the importance of looking beyond daily price charts. Many investors become focused on short-term fluctuations and forget that long-term trends are often driven by larger forces. Exchange supply, adoption trends, institutional interest, market liquidity, and investor behavior all contribute to the bigger picture. When viewed together, these factors can provide a more complete understanding of what may be happening behind the scenes. Another important takeaway is that patience remains one of the most valuable qualities in investing. Markets rarely move in a straight line. There will always be periods of excitement, uncertainty, optimism, and fear. Successful investors often focus on research, risk management, and long-term strategy rather than reacting to every headline. Whale activity can provide useful information, but it should always be evaluated alongside other market indicators. As XRP continues its journey within the evolving digital asset landscape, investors around the world will be watching closely for signs of increased adoption, stronger utility, and broader participation from institutions. If exchange balances continue to decline while demand grows, many analysts believe XRP could become one of the most closely watched assets in the cryptocurrency market. Whether that scenario unfolds or not, the recent withdrawal of 135 million XRP has certainly added another fascinating chapter to the ongoing XRP story. The coming months may reveal whether this whale activity was simply routine portfolio management or part of a much larger trend developing behind the scenes. Until then, investors should continue monitoring market data, staying informed, and focusing on facts rather than speculation. In the world of cryptocurrency, information is often one of the most powerful assets an investor can have. Before we finish today's video, let me remind you that nothing in this video should be considered financial advice. This content is created for educational and informational purposes only. Always do your own research, evaluate your own financial situation, and consult a qualified financial professional before making any investment decisions. Cryptocurrency investments involve risk, and past performance never guarantees future results. If you enjoyed this analysis, make sure to like this video, subscribe to Goldix XRP, and turn on notifications so you never miss the latest XRP news, whale activity updates, market insights, and important developments. Also, leave a comment below and tell us what you think. Why do you believe whales moved 135 million XRP off exchanges? We would love to hear your thoughts. Thank you for watching, and we will see you in the next video.